Misclassifying one worker can cost a small business tens of thousands of dollars in back taxes, penalties, and interest. It is one of the most common and most expensive mistakes new founders make, and it usually starts with a totally reasonable thought. I will just call them a contractor. It is simpler. Sometimes that is fine. Sometimes it is illegal. Today we are breaking down the real difference between a 1099 independent contractor and a W-2 employee. Why the IRS cares so much, how to tell which one you actually have, and what each choice means for your money and paperwork. This is founder filing, and as always, this is general education, not legal or tax advice, so loop in a professional before you hire. Let us define the two clearly. A W-2 employee works for your business under your direction. You control what they do, when, and how, and in return you withhold taxes from their paychecks and pay a share of their payroll taxes. A 1099 independent contractor is essentially a separate business you hire to do a job. They control how the work gets done, often serve other clients, use their own tools, and handle their own taxes. The names come from the tax forms. Employees get a W-2 at year-end. Contractors who you pay $600 or more get a 1099 NEC. The label matters enormously, but here is the key. You do not get to just pick. The nature of the working relationship decides it. Why is the government so strict about this? Money. When you hire a W-2 employee, you are required to withhold income tax and pay half of their Social Security and Medicare taxes, plus unemployment tax. When you pay a contractor, none of that withholding happens. The contractor is responsible for all of it themselves. So some businesses are tempted to call employees contractors to dodge payroll taxes, benefits, and protections. The IRS and state labor agencies see misclassification as lost revenue and unfair to workers, so they audit for it aggressively. If they decide your contractor was really an employee, you can owe the back payroll taxes, penalties, and interest, sometimes years' worth. So how do you tell which one you actually have? The IRS looks at the overall relationship, grouped into 3 areas. First, behavioral control. Do you direct how, when, and where the work is done, or does the worker decide? Second, financial control. Do they have their own business expenses, the chance to make a profit or loss, and other clients, or do they depend only on you? Third, the type of relationship. Is there a contract? Are benefits provided? And is the work ongoing and central to your business or a defined project? No single factor decides it. If you control the details of the work and it is core to your business, that points strongly toward employee. If they run their own show, that points toward contractor. Let us talk numbers, because the costs differ a lot. A contractor's rate may look higher per hour, but you pay only the agreed amount and file a single form. No payroll taxes on your side, no benefits, no unemployment insurance. An employee costs their wage plus roughly 7.65% in employer payroll taxes, plus unemployment taxes, workers' compensation insurance, and often benefits. As a rough rule, an employee costs meaningfully more than their base salary once you add everything up. But an employee gives you control, loyalty, and continuity that a contractor may not. The cheaper option on paper is not automatically the right one for your business. The paperwork differs too, so know what each path requires. For a contractor, collect a Form W-9 before you pay them, which captures their taxpayer information. And if you pay them $600 or more in a year, issue a 1099 NEC by the end of January. That is largely it. For an employee, there is more. They complete a Form W-4 and an I-9 to verify work eligibility. You register for payroll, withhold, and deposit taxes on a schedule, pay employer taxes, carry workers' comp, and file a W-2 each year. Many founders use a payroll service to handle the mechanics. The extra administration is real, so factor it in before you decide. Here is practical guidance to stay on the right side of the line. Use a written agreement that spells out the scope, the deliverables, and that the person controls how the work is done, if it is genuinely a contractor relationship. But understand that a contract alone will not save you if the day-to-day reality looks like employment. Do not tell a contractor exactly when to clock in, supervise their every step, or make them work only for you and then call them a contractor. When you are unsure, states often have stricter tests than the IRS, and some use what is called the ABC test, which is tougher. This is exactly the moment to ask a CPA or employment attorney rather than guess. Let us bring it home. A W-2 employee works under your control, and you handle their tax withholding and payroll taxes, while a 1099 contractor runs their own business and handles their own taxes. You do not choose the label. The real working relationship decides it, judged by behavioral control, financial control, and the type of relationship. Contractors are cheaper and simpler on paper. Employees cost more but give you control and continuity, and each has its own forms. The W-9 and 1099 for contractors, the W-4, I-9, and W-2 for employees. Misclassification is expensive, so when in doubt, get professional advice. This was educational only, not legal or tax advice. If it helped, subscribe to Founder Filing, and the free resources in the description will help you hire with confidence.